So welcome this morning. There is no moderator role today, so I will take this a little bit. And we will start directly with our welcome notes. So I give the floor to us, three of us. And our host here today, Christoph Boschan, the head of the Vienna Stock Exchange.
Yeah, thank you so much, Florian. And good morning, everyone. And a very warm welcome here at the Vienna Stock Exchange. Welcome to our humble cabin. Yeah, I just said it outside. This is nothing really extraordinary here. It's actually a building that every Viennese institution has. Irrespectively how irrelevant that institution may be. And equally ordinary, by the way, is the history of the building. Built by Italians, bought by the Prince of Liechtenstein, then it's so Jean-Baptiste Bernadotte as a tenant. By the way, it was right here that he raised the tricolor. Advocating for liberty, fraternity, égalité. The Habsburgian at that point in time really didn't like that much, threatened to kill him and then had to flee the city. It did not really do harm to his later career, because as we all know, he then established the dynasty in the north of Europe. We then saw the British, which used it as their embassy, and then, since around 2000, it has been home of the Vienna Stock Exchange. So it really warms my heart to welcome now the entire European capital market scene here on our premise. It is really a first, I think, that we have Better Finance here with us. First, something that happens quite rarely when it comes to a 250 years old institution like ours. But now, concerning the actual issue at hand, Better Finance. When I dropped my kids this morning at school and at kindergarten, I first felt a certain relief. The parents among you know what I'm talking about. But then a certain stress level kicked in again, because it had reminded me yesterday, Chris, you are supposed to say some welcoming words tomorrow morning. And so I used my car drive to the city to intensively think about Better Finance. How does this resonate with me? What does it actually mean? What does it potentially mean for the whole of Europe? And I came to very simple conclusions. I said to myself, well, from the vantage point of the companies, it's very simple. It just means more access to capital at lower costs. And for the investors, it's also very simple. It means more investments with higher returns. But now, you actually see the problem. Two aims that are quite irreconcilable, deeply contradictory. You can't have both, because as we all know, the capital costs of the one side are the returns of the other side. The yin and yang of investment, the two sides of the same medal. So, and in that sense, Better Finance can only mean to balance the two things in the best possible way, particularly taking out everything that prevents the two sides from coming together, and often overlooked, I think, adding something that supports the two sides in coming together. And concerning this adding on something, I'd like to share my experience from London last week. We went to London, had an investor conference there, and Anita somehow managed to get me on CNBC, and I was so keen to pitch the Austrian investment story. I was so well prepared. And unfortunately, that particular day, it was the Rank IPO, Rank, that famous gearbox maker for tanks, that withdrew its IPO right that day. And then the anchors, the ladies, instantly did the right thing from their perspective. They somehow sucked me into a discussion about the IPO scene and what is wrong, particularly in comparison to the US. And as you know, I mean, we exchange managers, we are quite reluctant to comment on this because we strictly committed to neutrality, and we dare to comment on specific individual cases. And I then started with a kind of wishy-washy answer and tried to evade a specific answer. However, they pushed more and more, and then I really thought about it, and clearly stated, look, there is a main difference. Why do IPOs happen in New York, and why is it that genuine European companies float abroad, and particularly in the US? And that is for a very simple reason. Because they find the deeper books, the higher liquidity, and last but not least, the higher valuation there. Well, in some cases, I mean, in 80% of the cases, they still float on the home market. So the vast majority of the IPOs still happen on the home market. Yeah, a very prominent example of a home market floating, which just happened a week ago. But anyhow, obviously we have that a problem when it comes to large floatings. Birkenstock, and ARM in particular, two really genuine European companies that floated in the US. So what I'm trying to say with all of this is that we should really focus on the relevant issues when it comes to developing the capital market. Just let us not get lost too much in the details. And the relevant thing is actually how to establish relevant, substantial capital pools in Europe, because this and only this will make the decisive difference. We are also engaged with listing acts, CSRDs, CRSDs, the nitty-gritty of the allegedly further development of the capital market, but it is all quite irrelevant when it comes to the real substantial questions of substantial capital pools. And how do you establish substantial capital pools in Europe? Well, my take would always be to at least partial orientation of the pension system to the capital market as a supplement, not as a substitute. That is something that you instantaneously have to say if you want to avoid the shitstorm that will automatically come over you when you say something like this, at least in the German speaking region. And this and only this will then make the decisive difference. So please don't let us be lost too much in the details, and let's keep that in mind. Now, I'm usually not suspected to talk too little, so that is why I will now hand back to you guys. Please spend your polite applause, not for me, but to Florian, and I really mean it. I will mention her at a later stage, because you did so well in bringing that to Vienna. The applause is yours. Thank you so much for your commitment to this market and the European market.
And the last remark from Christoph actually makes a good transition to me, because I wanted to start first with a thank you. A big thank you to Florian and the IVA team, and also to the Better Finance team, because both teams made it possible to have the full room of people today and discuss capital markets in the European Union, and also to the very generous and kind host, the Vienna Stock Exchange, that is hosting us today and makes it possible for us to discuss it. In fact, as Christoph mentioned, the current situation in the EU is as such that the companies are not being listed here. They go away, they go abroad, they go to the US. So with this, we also as retail investors are losing our chance to invest and participate in the growth and value creation. And we are really very good here in the EU as savers. We save a lot, we keep our money on our banking accounts, but we do not invest. And we do not invest in capital markets. So today we would, and this is my request, we are looking forward to discuss with you and also to hear about Austrian perspective, because we discuss quite often as Better Finance those things in Brussels, but we are really interested in the also national here perspective in Austria, how we can improve the situation. We have also policymakers with us, so I hope they are also going to listen very carefully. What are the ideas, what are the solutions and remedies to improve the current situation? have the EU citizens invest in capital markets. Thank you.
So a warm welcome from my side as well here in Vienna for our conference. Thank you, Ola, for these warm words. Thank you, Christoph, very much for being our host and the informations about the Vienna Stock Exchange, which is in fact a very old institution. I think more than 150 years or more, even 250 years. Look, it's an honor to be here. And speaking about sponsors, you see them here as well. We are very happy that we have Erste Bank, VIG, Raiffeisen Bank International, Mazars, Scalable Capital, World Gold Council, the Wiener Börse, and the Austrian Control Bank as our sponsors for this event, and we are very grateful that they're being here. I'm also grateful that you are here. I see so many familiar faces from the European community and from the Austrian community, and we have the unique chance to discuss today together and to present our major points we have to present at the moment. And I think it's a good platform to exchange information and to gain a better understanding how the European institutions and the European federations are functioning, and how we can understand it on the local perspective and vice versa. So all this exchange makes us very fruitful for future challenges. We have to navigate through future challenges. We had yesterday already a couple of working meetings, working groups. So there was already, I think, one message that there's something lies ahead of us. It's an European election, by the way, and an Austrian as well, an American as well. So the next year will be very exciting. And we need feedback, we need facts, we need discussions. And this is very important for us. So I will stop here. I'm very happy that you are here again. And let's enjoy this session together today. I will come to our keynote speaker right now. And I will make it very shortly, the introduction of our keynote. We are very happy that we have him here today. He is Director for Financial and Enterprise Affairs at the OECD and a long-term friend of the Better Finance community, when I can say that. And it's an honor to have you here, this Carmine Noia. Thank you for coming.
Okay, thank you very much. I mean, I'm honored and impressed, to be here. Thank you for the invitation, IVA and Better Finance. And again, we have been working with, especially with Guillaume Parache, a lot in the last, I would say, 15 years. And it's, I think, I mean, you are still Better Finance, and also with new people. In the meantime, I changed different roles, but I think we have always been aligned in what we have, been discussing, also with maybe different opinions, but also always in a constructive way, starting with, I think, the first stakeholder group at ESMA, the first time that they were, established, and then, which was a good thing, because the participation of all stakeholders, I was a stakeholder at that time, I think always is a great, of great importance for trying to have better regulation. Thanks also for the initial word by I don't see Chris again, Aleksandra, especially Florian, and now so I should say I think Grüß Gott everyone, but my German is not great. No, now let me. I was really happy for this invitation, and I'm happy that I made it. I mean, it's important. Our conference theme, which is really to have the need, and I was discussing already also with Rainer, to have greater, more sustainable, accessible, developed capital markets for in Europe, in European Union, but especially for European and European Union investors. And so I think maybe I would like to add that we need, I would say it's not a contradiction, but it's complementary. We should aim for a strong and sustainable growth in European capital markets. Now, as was just mentioned by the CEO of the stock exchange, I mean, the case for having, maybe deeper, better, but larger and more developed capital markets is clear. And the EU needs a greater private capital mobilization to enable, in particular, the transition to a sustainable economy. Now, I would say financialization is not an end in itself. We're telling also company going on the market is not listing is not an end in itself. Would be dangerous to do that. But rather, I would say capital markets in broad sense, also from the investor's point of view, so not only equity, but in broader sense, including, and in particular also bonds, are important because they are really well suited for long-term, so for financing long-term uncertain ventures, and so this is exactly what we need, maybe especially in this period. And so mobilizing funds in this way is more important than ever. Now, the EU ambition for, despite what is happening now and what happened in the last, I would say, 3 years, so the ambition of less resource-intensive and more sustainable growth, so necessarily requires enormous investments in nascent technologies. Now, this is an interesting number. Now, the European Commission, the own estimate of what is really needed annually is to get this is an increase annually of 645 billion euros, which is 1.5 times larger than the total Austrian GDP. Okay, so this is what we need annually as an increase in investment. And obviously other, massive investment will be needed also for the reconstruction of Ukraine. So this is the increase compared to what we had and what we calculated in the previous with the previous one, needed for the next decade, 645 every year. Now, clearly, amounts of this is an order of magnitude which is, enormous, and so we need the mobilization of private capital, which most effectively, we have discussed a lot of public-private markets, amount of liquidity, delistings. We had 40,000 delistings in the last 15 years all over the world, 40,000. And the trend is structural, was like this. Now there are good signs. It was not like this only in Asian markets, okay? We had a good exception, I would say, but very targeted for EU MTFs, okay, the so-called, I would say, listing MTFs. But obviously, so we need more robust, stronger capital markets. And we need it also because for transition, for reconstruction, for, climate. This is what happened. Some of us, Karel is here, but Guillaume and others, we like history, the history of capital markets, of stock exchanges. This is what happened when, we had the construction of other important industries, I would say also network industries, railways, communication. So we had capital markets supporting the growth. Now, EU capital markets are not currently offering this mobilization, at least to the extent needed for this transition. And the size, what is demanded by the economy. If we see some indicators, and I speak also under control of Rainer, we have, some of them were mentioned, but IPOs, SPOs, stock market cap, corporate bond issuance. Now, the EU share in the global over GDP is much greater than the EU share for these indicators on the markets. This is a back on the envelope thing, but okay. So policymakers, I think, should proceed with this in mind and should focus on policies that can encourage households to invest in European markets. Now, having said that, now what we can, and so targeted also for today. So I will provide an overview on three, basically, some strategies, selected strategies to attain this goal through policies actually to educate, protect, and encourage individual investors. Now, what kind of policies individual investors need? Now, I selected 3 areas. Obviously, I'm biased by my new job since 1.5 years. So 3 areas I think are important, I would say are essential, and we work a lot on these. In a sense, to accompany the investor, you know, from newly born, so from the cradle to the grave. Okay, so all over his life cycle. So financial consumer protection and education, corporate governance, and pension systems, funded pension systems. And so I will give you a brief overview of why these areas are important and what we are doing. Also, why OECD, considering that, okay, luckily, capital markets are more and more integrated, okay, okay, it's true that European companies, they go sometimes on the other side of the Atlantic, still European companies, there's still a lot of cross-border investing. Now, first, so let's start from the newly born, individual investor. So who is in need of financial consumer protection and financial education? Now, financial consumer protection, financial literacy are key for fairer, more sustainable, and inclusive growth and financial stability. They're designed to protect investors from undue risks while benefiting from the opportunities afforded by participating in capital markets. And I have always been a strong supporter, as Guillaume knows, of more and more, not only indirect, but also direct participation to capital markets, obviously with, rules, transparency, differentiation of portfolio, because, sometimes, as also better finance studies showed, so maybe fees are not so competitive. Okay, in particular, some policies in these areas allow individuals to do 3 things: be included in the financial system and have access to quality financial products and services, have control of their finances and make so informed financial decisions, and benefit from appropriate protections and as they participate in the market. So, for instance, transparent and accurate information about financial products, fair and equitable treatment by providers, and access to redress, a point that Better Finance has always pushed, redress mechanisms when harms occur. Now, we have updated at the OECD our G20 OECD high-level principles on financial consumer protection. Actually, we were lucky to do it in the G20 in Bali. The G20, there were a lot of tensions, obviously, after the illegal aggression of Russia against Ukraine. But okay, we did it, and we did it with a view of supporting the sustainable and more sustainable and accessible capital markets. The principles are the international standard for effective and comprehensive financial consumer protection framework, and they are specifically designed and intended to be applicable to any jurisdiction. And actually, they are cross-sectoral in nature. So covering, banks, insurance, capital markets. So we strongly actually encourage all countries to adopt the principles in establishing or improving their framework. Actually, just yesterday we had the first meeting of the monitoring group for the G20 OECD countries to check the implementation, but obviously all these principles are good for also other countries, and we have this network of INFE, of all financial regulators under 40 of all over the world to do that. Now, the updated principles reflect global best practices and are forward-looking. Now, we introduced 3 new cross-cutting themes, namely digitalization, financial well-being, and sustainable finance. And these themes reflect key trends impacting individual investors and are relevant to the consideration and implementation of each and all of the principles. One of the principles also, building on an old recommendation, is financial literacy and awareness. As new individual investors enter the market, now financial literacy is obviously a crucial factor, because tomorrow I will be in the school of my kids in Rome, and I've always been there every 2-3 years, and because they are really exposed and given also they're not the technology is impacting youth in a very special way. So this is particularly important because technology and easier access and also I think low cost has obviously a lot of advantages, but also some risks, as usual, risks and opportunities. Now, the challenges brought by the current macroeconomic development, the environment, so make financial literacy even more and more relevant. But the evidence shows that adults and in most countries have difficulties understanding basic financial concepts, planning ahead, or avoiding debt trap cycles. And we will release actually in November new data on levels of financial literacy in more than 35 countries around the world. We have these PISA tests, you may know. These are for youth, and then they are the same tests all over, in many, many countries. So they're important to check really where we are. And to address challenges brought about by limited financial literacy, also the OECD is assisting authorities in building broad-based partnership to design and implement national financial literacy program. We are doing this also, we will present in Germany, but okay, we're doing this. In some cases, countries have support of DG Reform and the Commission. Now, we also support regional initiatives on that. Maybe some of you was in Brussels last Monday. We presented with Commissioner McGuinness this new framework, financial competence framework for children and youth in the European Union, which is interesting because basically we divide, the needs of financial education, so how we teach is obviously different according to groups and different age. So there are 3 groups of youth. We did it also for the adults. And then we basically, this is for ministries, university, school ministries in different countries. And then there are all the different topics that should be tackled for different, classes. This is quite interesting. Now, second thing, I'm conscious of time. This is a bit more for the grown-up. Okay, this is obviously, as also some of you know, my obsession. So we need sound corporate governance. Okay, I've been working on that for many years in different roles. And why we need it, we also were discussing yesterday with Karel. Sometimes we have seen also amazing failures, in the financial sector in the last months, years. Would it be entities legally outside the normal, remit in normal countries, thinking of Bankman-Fried, other guys like that, but also, the banks that failed recently were legally banks. In the US and in Switzerland. So in countries that also are known for or should be for also accurate regulation, but especially supervision. And we have seen dramatic, amazing failures of corporate governance. Sometimes even the EU, we regulated the margin, details of everything. But then here we had people in the executive, but non-executive, they have no clue of what was going on. Okay? So, and then we talk a lot, about many issues, but independent directors. Independence is made by competence. So corporate governance is essential. And it's important because it helps, to make capital markets more attractive by both companies and for both companies and investors, providing, other things being equal, cheaper access to finance, which in turn support innovation and economic dynamism. So having a standard is important. Again, I had to sell my carpet. So we recently updated our G20 OECD also. This was a great success of the last G20. I have to say this G20, I'm attending now this G20, G7 meetings. There are a lot of words, this nice press release discussed months in advance. This was the only deliverable of what was delivered in, so at least we had that. International standard approved, again, by OECD, G20, and also the FSB, non-OECD, non-G20, so Hong Kong, Singapore. And this is not a corporate governance code. This is also, Rana, for regulators, is the institutional framework and supply and demand. So institutional investors and listed companies. I'm quite happy and satisfied for that. We also published the same day, we presented formally 9/11, which is not a great date, but we presented also the fact book, which is a sort of a thick volume, is the monitoring of these kind of principles. Okay. They had 3 strategic objectives, and again, I like this view of the OECD, which then now I'm on that side. So seeing corporate governance as an instrument to facilitate access to capital markets, to facilitate investor protection, actual and prospective investors, but also to support corporate sector sustainability and resilience. And okay, we have a fully new chapter actually on that, promoting disclosure of sustainability-related information, clarifying also the responsibilities of boards when dealing with sustainability issues. And also, and this could be also interesting for you, basically trying to encourage and favor engagement of companies or boards with shareholders and stakeholders also on these issues, which is, we know, is a hot topic. And we know, I mean, we can discuss on general meetings how they work. And okay, now third and last point, now in this sort of life cycle of the healthy investor, let's talk about pension systems. I mean, sound asset-backed, in particular, pension systems play an important pivotal role to support both, I would say, households and capital markets, because typically this is long-term, should be long-term view. So for households, these systems provide a secure and reliable, hopefully, avenue to save for retirement. So offering, you know, peace of mind and financial stability in their later years. And additionally, well-structured pension systems channel substantial funds into capital markets, so boosting liquidity, what maybe we need more in European capital markets, deeper markets, and facilitating economic growth. So these investments serve as a stable source of capital, so promoting innovation and job creation, which is, you remember what I mentioned at the beginning, especially in this period. So in essence, so sound pension systems are the linchpin that connects the financial well-being of individuals with the vitality of capital markets. So creating a symbiotic relationship, you know who I am, that basically benefits both parties, okay, which I think is really essential, and so contributes to economic prosperity. Now, at the OECD, we do a lot of work, and I'm happy when we discuss at the Eurofi with you and with Guillaume, that you are one of the few readers of our work. No, I hope that there are some. But our also work on pensions and our pension outlook, there are also issues of data that we have discussed, and so I think we can also increasingly also collaborate on that. And we release the pension outlook every 2 years and focus on asset-backed pensions arrangements. And also we publish this Pension at a Glance, which is also published every other year, and focuses mainly on the pay-as-you-go system. Now, there are also here international standards and the OECD core principles of private pension regulation, which provide an overall and a solid framework for pension funds and other pension providers, such also as insurance companies, and my directorate work a lot on that. So basically try to guide them in managing assets that are earmarked for retirement in the best interest of members. And also they highlight, okay, the importance of long-term perspective to promote innovation, growth, and better retirement incomes. So we provide also, okay, other standardized pension data. We work a lot on reforms of different countries. Now, finally, and final point, why final? I said 3, now you're cheating. No, because it's something that is going across them, which is sustainability and resilience. So basically, this is in a sense the red line, the arteria that flows in support of the life cycle of investors. And this is the sustainability dimension of all mechanisms and all policy dimensions and standards. This is very, very important. So I look forward also to listen to today's discussion to how to uphold, strengthen, and promote sustainable capital markets. We work a lot, so my directorate is really working on that. We had also interacting with many of you in different also ways. Obviously, we work with countries, so you should also work at the national level with the delegation that are coming to the OECD. We also recently, just in the last mention, published these M&E guidelines for responsible business conduct. It's a nice work, even if I would say very important. Some people now don't like it because this has been taken as a model by the European Commission for the due diligence directive with all the details. I think it's always good to have a principle-based, I would say, regulation and standards, and then sometimes having binding. But okay. M&E guidelines are important. They deal on a lot of issues, including, again, sustainability. We need to also to implement them, apart from what we'll have for from in the EU debate that we know is quite tough. We work a lot again on all, and we will work also listening to you carefully on implementation, learning a lot from data, and in some areas I think data is still an issue also when some analyses are performed even by the Commission. Developing also guidance for business, I think again working a lot also with investors. So I mean thank you, very much. I'm optimistic about what can happen. Okay, we are now at the end, at least in the EU, of the political cycle. Interesting side. I mean, it's said that sometimes we have acceleration in the development of markets after big crisis. I really hope that we are not waiting for another crisis to have this improvement. I think that the wise sign, obviously I'm biased as an Italian, is that President von der Leyen, she now gave this task to two Italians, whom I think are quite good, Mario Draghi and Enrico Letta, for writing these reports on the competitiveness of the market and on the single market. And I think that I think all of us, I think, also encourage you to be part of these construction, because I think this will be where the new Commission also will build new rules. So thank you very much. Sorry I was a bit longer, but I'm an Italian talkative guy, so thank you.
Thank you very much for this encouraging speech. I think you mentioned directly the pain points of the future. It's financial literacy, of course, corporate governance as always, and a little bit new for us, the pension systems, which is on the focus of the European Union in the future. So thank you very much for this insight. Always nice to hear you, and if you extend, it's not a problem for us. We in Austria we like to talk as well.
Oh.
So, yeah.